Let's take a look now to see how the markets performed today. Well, both local and international factors holding the JSE flat. Global markets came under pressure from disappointing US retail sales figures. And here at home, poor mining production figures and load shedding raised concerns over the country's economic growth rate. So that all shares sitting pretty much flat today. The big retailers and banks, incidentally, were down. Miners made a positive contribution, with AngloGold Ashanti up more than 2.5%. Good showing there for the gold miners. In the space of commodities, another day of gains for Brent crude oil, now sitting at $64 a barrel, or just above that. That's a 3-month high, by the way. What's behind it? Well, cuts in supply from oil cartel OPEC, and optimism that the US-China trade talks are progressing. Of course, that goes either way as the week progresses. Let's take a look at your currency. Well, no love for the rand on Valentine's Day. Analysts say continued concerns over embattled Eskom and its impact on the local economy soured sentiment. A little bit of an improvement from earlier on in the day. Now 14.14 to the US dollar, 15.97 to the euro, and 18 rand 10 cents for a British pound. Well, Wayne McCurrie from FNB Wealth and Investments joins us now in studio. Wayne, thanks very much indeed for coming in. I want to start with the rand. At the start of the week, we said that there were international factors, particularly the strong dollar, weighing on the rand, but it became clear as the week progressed that local factors are really pushing this currency.
Look, they are, but it's still dominated by global factors. I mean, the rand, beginning of January, was 14.50, then literally 2 weeks ago it was 13.25, and now it's back at 14.15. So the rand is volatile. It's a lot to do with a stronger dollar. It's a lot to do with positive outcomes or potential positive outcomes on the US-China trade talks. So for want of better figures, I would say it's 70% global, 30% local. And of course, we all know the local factors that are pulling the rand down.
Yeah, it just gets a bit concerning when you look at that oil price I showed earlier. What, $64, yes. We've got a weak dollar. I'm just thinking what happens with the petrol price come February.
It goes up.
And no way of actually betting on probably a rand strengthening?
Look, I think fair value for the rand is between 12.50 and 14. So in the last while, every time it's gone above 14, it's come back into that fair value range. So I wouldn't lose all hope on the rand going back below 14. Brent, I don't think is going to go a lot higher, because the moment it goes higher, more US shale gas comes into the system, which puts a cap on the price. But we also know the chances of the oil price staying below 60 for a sustained time period is very small, because OPEC has said we will cut production to get the price up almost irrespective of what it takes. I mean, they've made that commitment quite clear.
It was a very interesting day on the markets, and I'll tell you why. I look at the NASPAS share, nearly 2% high. Ordinarily, that boosts our JSE up. It kind of tells me that our local stocks didn't do too well.
No, definitely not. But I mean, literally the other day when all the retailers and the resource shares went up, they pulled the market up and NASPAS went down. But it is unusual for NASPAS to go up and not pull the market up. So the financials didn't do too well, the retailers didn't do too well. But, you know, it's only one day's movement. A lot of the shares, specifically in my view, the banks and the retailers, are actually quite cheap at these levels.
Yep.
So, you know, maybe now this weakness is an opportunity to actually go and buy some of them, because if you have any hope that South Africa's future is going to be better than the last 5 or 8 years, then these shares are cheap and they could actually do quite well over the next 2 years.
Because it was a bit of a confusing situation for any investor into retailers. We saw those shares swing up and down. Are you telling me it's probably worth a buy at this stage?
Well, look, roughly speaking, the retailers are probably 50% cheaper than their highs.
Yeah.
And in the last year, virtually every single one has come under intense pressure, price pressure. And that's normally the time when you should be buying. You don't know if it's going to turn this year or next year. You just have no idea. So the only thing you really know in investments is the valuation of the shares today. You can have a view on the future. I have a mildly positive view on the future of South Africa, but you don't know when it's going to happen, or you don't even know if it's going to happen.
I want to talk about that mildly positive view. If you factor in the consequences of Eskom's troubles on growth, Wayne, what are you seeing?
Look, obviously it's negative, but I think there are a couple of mitigating factors. I mean, obviously, Eskom must survive. So who's going to pay and how that's going to be paid and what's going to happen, we don't know yet. But Eskom cannot fail. So Eskom will survive. It just depends on who's going to pay the price to make sure Eskom survives. So it's not going to disappear. Secondly, the big difference between this round of load shedding and previous round of load shedding is at least we've got something to fix. And if we fix it, we'll have enough electricity, because in theory, there is way excess electricity capacity. It's just not working. So at least we have the ability to fix it now, whereas previously we had nothing to fix. We just didn't have the capacity. I mean, electricity supply is actually falling. So in theory, we should never have to build another power station. There's enough installed capacity just for a myriad of reasons. We only can use 60% of it instead of 90% of it. That's the actual problem. So I know it may be clutching at straws, but rather have a car that's broken down that you can fix than not have a car at all.
Yeah, indeed. Wish we could really actually have a further conversation on this. But thanks indeed from FNB, Wayne McCurrie there, talking to us about the markets.